All right, everybody. Welcome to another YouTube video. And today I'm going to talk about a question that I got from Instagram yesterday. And it was mainly about like, why can't CPAs give ballpark estimates? Like, why do I have to wait? Why do they have to get back to me? And the way I'm going to approach this is we're going to actually walk through an example, and I'm going to make the case why they have to use the software and why they are reluctant to give ballpark estimates. But before we do any of that, what I'd love for you to do is, if you're getting value out of my content, I'd like you to do four things, just four simple things. Number one, like this video. Number two, subscribe to my channel. Number three, share it with your friends. And then number four, hit the bell so that you will get alerted when I release new videos. And I'm trying to do 2 to 3 videos a week, trying to keep that consistent rhythm. So here's my deal. Here's my approach. So the question always becomes, you're a client and you call up and you ask your CPA, hey, I need a quick estimate. I have $20,000 of stocks to sell. What is my tax liability going to be? And the CPA says, hey, I'm going to get back to you on that. And you're like, no, I just need a ballpark estimate. I want to do this right now. And so you as a client, from your point of view, you're sitting here thinking, what the heck? You know, I'm paying this CPA all this money. He does my return. He should know that. Like, he should be able to do that. Well, I'm here to tell you that I'm going to take the side of the CPA. Before you think I'm biased, I want you to hear me out. So one of the biggest things with a CPA is you got to remember, they might have hundreds of other clients. You know, they're trying to run a business just like you might be, or, you know, maybe one of your friends is running a business, but they have a lot of people that they have to serve. And so they have to balance that out. There are some clients, you know, that have deadlines that may be pressing. So maybe they're trying to qualify for a loan for a bank. Maybe they're doing something else, this, that, or the other. But there may be other deadlines that they're working against. And so you have to be very, very mindful of that when, considering like their bandwidth. They may not, you just remember, they're not there just waiting, for your phone call. But with the software piece, and this is mainly focused on taxes. Taxes have a lot of moving parts. Could I give you a ballpark number? Absolutely. I could ballpark and say that this tax increase is going to be $2,000. I could just take your tax rate, I know roughly your income, and say, oh yeah, you're in this tax bracket, yeah, it's going to be this. But then what happens if it's not? What happens if you lose a credit? What happens if you do this, that, or the other, and then all of a sudden, instead of a $2,000 tax hit, it's a $4,000 tax hit? A lot of clients are very sensitive to that, and a lot of clients will get very upset over that. It happens time and time again. This is exactly the reason why CPAs are very cautious about just giving ballpark estimates over the phone. And I could tell you and disclaim it 100 times, saying, hey, this is an estimate. Hey, we don't have our final numbers. This is based on the information you gave us, blah, blah, blah. You could do all of that, and a lot of times it's still not necessarily good enough. So what I want to encourage you all is to be more understanding of that. And we're going to actually walk through an example. I'm just going to do it through like a Zoom style type meeting, so you can kind of see. We're going to use, I'll use the TaxCaster app, which is a free app that you guys can use to estimate your taxes. And I'm going to walk through an example of how this could happen, because whatever goes on in the TaxCaster software will also go on in a Tax Pro's, like if a Tax Pro is using software, they're going to see the same thing. So stay tuned. I'll transition over to that, and hopefully this will help you have a little bit more understanding as to why Tax Pros need to be using software. All right, everyone. I was going to talk about and follow up with the previous part of this video, which talked about one of the reasons why CPAs need to be a little bit more thorough, and they can't necessarily give you a ballpark estimate. And I'm going to use a free tax tool that is widely available to anybody if they want to estimate their taxes and model it themselves. And
I understand that a CPA will use professional tax software, but at the end of the day, it will get the point across why CPAs want to do a little bit more analysis before committing any number to you. So we're going to do a typical case here. We have a couple, they're married, no kids, and they have a $60,000, they each make $60,000. They had $10,000 withheld in their paychecks. So right now, and they will make it clear, they had a little bit lower income this year than they did in past years, and they didn't get the March 2021 stimulus, which was $1,400 per person. And for context, you got the full, you can get the full amount in 2021 if your adjusted gross income is under 150. If it goes above 160, though, you get none of it. So it starts phasing out from 150 to 160. So I want to make these kind of lay out the groundwork here so that it will make sense. And so what we're looking at is we have this income here of 120,000, if this amount, and we have, this is a standard deduction. So you're left with this taxable income in the marginal rate of 22%. And so this is where we stand kind of on the federal tax. And you're seeing, okay, here's this $10,000 of payments that were withheld. So, and you're saying, well, this doesn't make any sense. Like, where's the rest of it? Like, why am I showing a $419 refund? Well, it's because of the $2,800 stimulus that they should have received, but they did not. So this is why we are seeing this $419 refund. So now we're gonna go and say, hey, this is, let's say now you're like, hey Matt, I want to sell $40,000. I have this Tesla stock, it's gone to the moon, and I have a $40,000 gain on it. I want to sell it. Should I sell it? And I'm like, and you're like, I need a number right now because I got to do it. I want to do it right now. I think it's going to go tank the next day. So I have to do it right now, right now. And, what am I going to do? I'm going to sit here and look at, okay, here's a tax table. You're in a 22% bracket. I might pull out like a quick, have you on the phone for 10, 15 minutes, and we'll look at, real quick, this 22%. I'm probably not, like, if you're wanting to answer quick, I'm not going to stop what I'm working on and then open up, because then I have to close that, whatever client I'm working on, I have to close that down, open up your tax return and go through it. So I'm probably not going to do that. I'm going to ballpark it. And if that's what you want, this is what's going to end up happening is I'm going to sit here and say, okay, well, it's 22%, let's say you have $40,000. 22% of $40,000 is going to be $8,800. That's how much more I think you're going to owe. And so you do this. Here's what you do, and we're just going to add it here. So you're going to go in here and watch this. So we're going to say, okay, $40,000 more of stock. Okay, I'm gonna go ahead. I'm gonna change this number to withheld because it illustrates the same thing. And I'm gonna say I'm gonna have withheld. So again, 4,000 times 22% is $8,800. So I'm gonna say 18,800. Okay, I changed that number. I understand I changed it on the withholding. You can change it in the estimated payments. It's all the same. So you're like, okay, cool. Now you see it, change this number up, change it and increase it by $8,800. So you follow me? Now I'm gonna go change that amount. I'm gonna go down here into short-term, because that's what we have. We have a short-term gain. And I'm going to say, oh yeah, man. Because again, let me be clear on this. If you ballpark it, I'm going to tell you $8,800. I'm going to do that and then tell you it's $8,800. But if I get into my software and I type it in, okay, so I'm like, okay, I'm going to pop this in here. Oh my gosh, you owe $2,375. I told you $8,800 because I ballparked it. So now I have to go back and call you as a client saying, I'm sorry, I'm a little off. I told you 8,800. Well, really, that wasn't enough. You owe another $2,300. 20, and you're like, what? What did you do, Matt? What did you do? So this is exactly why here's what happened here. You're like, well, let's talk about this. What happened is you lost that stimulus credit that you were counting on. If you were counting on getting it, now you're not, because you made this move to sell Tesla and you had a $40,000 short-term capital gain in the example I'm going through. So at the end of the day, the point is when you call CPA and you're calling them and you're wanting a quick estimate, that's probably not in your best interest. Your best interest is to get stuff ahead of time, give the CPA enough time to get back to you to run some numbers in the software, because you might be thinking, well, why do they always rely on the software? They rely on the software because of things like this, things that they may miss. Tax has a lot of moving components, and any one of those could result in a serious tax bill. And so I would much rather tell you that you're going to owe, what's 88 plus 23, $11,100. I'd much rather tell you that and come in a little bit better than that versus telling you, oh yeah, ballpark at $8,800. And here's the thing, I could disclaim it, do all that, but at the same time, you're still going to be upset. So this is exactly why CPAs are very reluctant just to give you a ballpark number. They really want to go into the software. They don't have to get all your income numbers exactly right. They want to check and make sure that there are not any tax cliffs like this example, where you could get thrown, like things could get thrown up, or things that they didn't think about, they pop up. Because what a CPA will typically do is they'll see this number and they're going to say, okay, why is that? Oh, it's because they lost a stimulus credit. And here's the thing, like this tool is very basic. When you type it into a return, it'll be more apparent like what the actual issue is. So again, please understand that. Like this is one example. Like if you're going to need numbers from a CPA, be mindful of that. Be mindful of, you need to give them time to give numbers, and they're not just blowing you off by saying, hey, let me get back to you, let me run it into the software. It's because of things like this, that they don't want to have to come back to you saying that you're going to owe more and that their estimate was off, because then all that does is makes a CPA nervous to have to call you back and tell you that. And it also makes you frustrated as a client saying, well, what good is my CPA if he can't figure this out? So you have to remember that. So hopefully you guys got a lot of value out of this. And if you have questions, drop them below in the comments.